So I welcome you once more to today's training. So in our today's training, we are going to look at a base trading strategy that can help you to become a profitable trader. And this is what we are going to discuss: set and forget trading method. Your mentor, my name is Lee Mashere. I'll be the one taking you through the courses. I'll be the one taking you through the courses, starting from foundation until we build the house together, until you become a profitable trader. So let us continue. So we are looking at the best trading method. So the issue is, have you ever wanted a trading method where you can set an entry? So what it means to set an entry, for the sake of those who are just new, I'll begin to show the practical. So don't worry too much. This is just a combination of those who have been trading, so that we get to. It is not a beginner's. We are not starting from the first point of what is trading, what is what. So we are just looking at a strategy that you can use. So we are going to do the practical one. So have you ever wanted a trading method where you can set your entries? Setting your entries simply means that you are able to set where you'll be able to enter a trade, to place a trade. Is it a buy or sell? You can also, where you'll be able to place your stop loss. Stop loss simply means once the price goes against you, or once a trade goes against you, you are able to, the market is able, the system is able to take you out from the market so that you don't lose more than if you want to lose a $10 or you want to use a $5. So that is what we call stop loss. You can also set your take profit target. So this is what we are going to discuss. A trading method where you can set your entry, your stop loss, your take profit, and let the trade be. So this is where, that simply means that once you set, you need to forget about the trading. You must set, then you forget about it. The moment you come, you need to either expect it, either you'll be profit or you find a loss. That is what this strategy is all about. So there's someone here, I don't know if this sound is not giving you issues here. So now, this is what we are going to discuss. We are going to look at the number one, set and forget meaning. What does it mean? Number two, set and forget trading strategy. For today, we are going to concentrate on these two. If time allows, how to use the set and forget in your trading. Okay? Then we're also going to look at examples of set and forget in trading. We are also going to look at the issue of the last thing as a conclusion. Okay? So now, what does set and forget trading mean? What it simply means is that you need to put your trading in, you must put your trading in order. Once you enter, you must put your set trade, your take profit in advance. You must also put your stop loss in advance. Okay? Then you leave that trade alone. You can come and check after maybe 5 minutes. You can come and check up to maybe 10 minutes. If you are holding you are holding a trade for 10 minutes, you come and check later on. Not you have opened a trade, you are busy looking at it. That way, that kind of trading, it makes you to become so. It makes you to change your trading position. If the market goes a little bit against you, you may decide to close the trade because you are busy watching the market. So this strategy can help you to do with away with fear. Okay, it will help you to do away with fear. So in this course, we are going through the different strategies that you can use, and one of them, this is set and forget trades. Okay. But the key to this style of trading is that you need to leave your trade alone. You must leave your trade alone. So price will either move into your take profit target or your stop loss. So this is the issue. But you will not do anything until it does. You will not do anything until it does. You must leave that. So it simply means that you need also to know how to go about this trading. I'm also feeling that those who are just new, they are just, anyway, try to get one or two. Try to get one or two. Try to get one or two for those who are just new, okay? So now, this strategy, point number one, what are some of the things that you need to consider when you're using the set and forget trading strategy? Number one, to use the set and forget strategy, you have to be comfortable with the different order types you are using. So we have different types of order type. You can use buy limit, you can use sell limit, buy stop limit, all those, or the instantly buy order where you just enter as exactly so that you are into the profit. So that is one of the things that you need to focus. The reason being is that because you are entering a trade, then not touching it, okay? You didn't, once you enter, forget about it, okay? So in the example that I'll show you, you see that the price, it moves into the key areas of support and it forms a bullish hammer pattern. So I'll show you what I'm talking about. So this signal, you must look for this signal. Once you see the bullish hammer pattern, for those who are new and for those who just started, we were looking at the type of the things that we use in trading, type of the language that we use. So bullish, it simply means you are looking at, it is a pattern which is formed by buyers. When buyers they are in control in the market, they will make a certain pattern called the bullish hammer pattern. So once you see that pattern, it is a signal for you entering a long trade. It started to trade so that once you enter, at least you can hold for an hour or for 30 minutes or for 2 hours or for 4 hours, okay? So this confirmation, that is what we are going to discuss, okay? So this pattern called the hammer pattern, you must confirm that it needs to break the higher, okay? We could enter our trades. Now I'll show you what I'm talking about to make it a set and forget, okay? And let me just go down to the screen so that you might see what we are talking about. Let me go down to the screen so that people, they should not see, they should not be seeing imagination. So when you look at this trade, let us imagine this is 1 hour. So for those who are just new, I'll be mixing. So when you are trading, this is how the market looks like. So this is the market, how it looks like. So this is what we call a candlestick chart pattern. A candlestick chart pattern. So you will not see you traders because you are using your phone, you are using your laptop. So what you'll be seeing on your screen, it is a representation of buyers and sellers in the market, because people are trading Forex. It is everyone. There are a lot of people who are trading in the world. Okay, there are people from America trading. There are people from Zambia trading. People from Ghana trading. So now you will not be able to see that, oh, that particular person is trading. You even see him sitting and trading. No. So what you see, it is a representation of all buyers in the world who are trading and all sellers in the world who are trading. Now, how is this representation? They are represented in form of a candlestick pattern, something which looks like a candle here. So where the candles that appears to be in red color, it is a representation of buyers, of sellers. So if you are a seller, you are represented as a red candle in the market. So any red candle in the market that you see, it is a representation of sellers. So those who are selling, they are represented as a red candle. Green candle, it is a representation of buyers. So now this is what we call what I was talking about. This is what we call the hammer, okay? This is what we call the bullish hammer. So this is what you are targeting. Once the bullish hammer happens, it was exactly on the support. So let me do like this. Let me try to do like this. So on top here, when you see here on top, let me try to change. I put another, which should look at least a little bit different. So here, when you see here, this is what we call our resistance. This is what we call our resistance. For those of us who we looked at resistance, you can relate what we are talking about. So this is our support. So our support, it acts as a floor. Then our resistance, it acts as the roof. So once you throw a ball, once you throw a ball and the ball comes, it hits on the floor. What will happen with the ball? It will bounce back. Once the ball reaches on the roof, it will bounce down again. Once it comes again on the floor, it bounces. This is what you are seeing. This is how the price moves. So meaning where it is bouncing, this is what we call supply and demand. Supply and demand. The support, it is all the area of support, it is called demand. All the areas of resistance, it is called the supply. So this is what buyers and sellers, they target in the market. Buyers, they always wait for the market to reach on the support. Because when the price is on support, it becomes cheaper and it attracts a lot of buyers. Because if you are a buyer, you want to buy. To buy in order to sell, you look for a price which is cheap. And wonder, those who are into selling, they will come to say, I need an order. They will not say, I want to buy. They will say, I want an order price. Order price simply means that they want to buy a lot of things at a cheaper price. No wonder it is called an order price. It is not like someone who just go and say, I want to buy iPhone 14. No, if you are just buying, it simply means you make loss as a buyer. But if you are ordering, you must order you must wait for the price to reach at what? If you are following, you must wait until the price reaches at demand level, which is support. So if you have gotten at least one or two from what I've explained, can I see some 5555 in the chat box? 55 in the chat box. If at least you have gotten what I've explained, a little bit of what I've explained. Can I see some 55 in the chat box? 55 in the chat box. 55 in the chat box. Before I go to the actual market, can I see some 55 in the chat box? 55 in the chat box. 55 in the chat box. Even if you are a newbie, at least you have like a language of supply and demand. You are able to understand a little bit of that. Can I see some 55 in the chat box? 55 in the chat box. If you at least have gotten a little bit understanding of what I've explained. 55 in the chat box. I can only see how many people confirming. I can see there's Carol. Okay, can I see some 55 in the chat? Someone said my voice is too low. Are you able to hear my voice? How is my voice? Someone to confirm? How is my voice? Someone to confirm? Clear. Okay, thank you so much. Thank you so much. So now, this is how supply and this is how we buy. So now, let us look at this strategy which we are talking about. Let us look at this strategy which we are talking about now. So now, what you do is, if you are using set and forget, if you are using set and forget, okay. So if you are using set and forget, so what you are, I don't know why these are, I don't know why it is showing, let us go, we were here. Just a minute. Okay, so we were here. I don't know why It is not. So those who have just let us make sure that we put our mics off. Okay. I hope it will not disturb us down here. So now, what I was saying is that when you are entering, when you are using this strategy, so what you do is that you concentrate on the point, on the entry. So on this point, you were looking at your support and resistance. So you knew to say, this is where our support was. This was history. So you were waiting for the price to come back on the same point, on the same entry here on the support. So you were waiting, no wonder you had to put your support here on this point. So you were waiting for the price to come back on this same level. So if you entered here buy, you made the profit, you crossed somewhere there, okay? Now you are waiting for the price to come back and hit on the same point of support level. So now if you entered from here, your take profit, you should put it on top of resistance, because once the price reaches on resistance, it will start coming back. So you put it on resistance, your take profit, or just a little bit below of resistance. Okay, so you enter from here. So your entry it was here on your support. Then your take profit, it was there on resistance. So that once the market begins to come back, it will hit your take profit, then you are out from the market. Or once it just reaches on the take profit, on the resistance, before it comes back, it hits, then you make profit. Now, always make sure that when you are putting your support, so you can decide either you enter from the very point on support, or you wait until it bounces. Then once it forms this pattern, once it forms the pattern of the hammer, then you can enter from this level here. So this is the entry. So you are targeting these pins from here up to there. Then your stop loss should be below the area of support, because you know to say once it does the reversal, when it comes back on the support, it can bounce back and going back where it is moving upwards. So always make sure that when you are setting your stop loss should be below the support, so that in case it comes back, because sometimes the market does the reversal, in case it comes back, you are able to recover once it goes back. But if you put it just anywhere, you discover that just a little bit of reversal, it will hit your stop loss. Then the trade which was supposed to get it right, you discover that you lose. And at the end of the day, you discover that it has hit your take profit. So once you set your take profit here, you put your take profit here, then your stop loss here, then you enter. You forget about this trade. You even start doing what you want to do. You come later to come and confirm. So you are only expecting two things to happen. Either the price will hit your take profit, or you find it has hit your stop loss. This is where you see those trades. People they have managed to hold a trade up to $100 on a single trade. Then you'll be wondering to say, how did you hold the trade? How did you hold the trade? It is by using this kind of a strategy. Because if you are just observing the market, the trades you are watching, you end up closing a trade prematurely because of fear. Okay? Because of fear. So now let us also look at another example if your stop loss it had to hit. So if you entered from here, your take profit it was here. So you wanted that the price should go and hit your take profit here. But from nowhere, after entering here, the market begins to go there like that. Before it reaches your take profit, it does the reverse up to the time it hits your stop loss. So you discover that you have hit your stop loss here, okay? Here. So once you come, you discover that, okay, this market it did not go on my way, just like that. So this is what you need to be looking at. Let us go and look at the issue of using support and resistance. I'm using support and resistance because it is the easiest way when you are using price action trading. Okay, price action trading. You must concentrate on the levels of support. Okay, on the level of support. You can also use some confirmation by looking at these other patterns. Okay, so for example, you were targeting a sell order. Okay, you are waiting for the market to reach at your resistance because this is your resistance. The resistance, this is where we sell. Okay, why do we sell on resistance? Because on resistance the price becomes so expensive. Hence, a lot of buyers they withdraw because no buyer could want to buy at resistance. They want to buy at order price, which is only support. So once the market reaches on resistance, a lot of buyers will begin to withdraw from the market. Hence, when the buyers are reducing from the market, the sellers they will come in with full control. No wonder you are seeing on resistance only a few candles of buy comes in, like here. Have you seen a green candle? Just like a small one. Why? Because a lot of buyers they have withdrawn. Hence, sellers they have more power. So once you see that the market is on resistance, you put your stop loss above the resistance here. Why above? In case it does the reversal, once it reaches on the resistance, it will come back again. It will continue selling. But if you just put it in now, your stop loss, like here, you discover just a little bit of backup like this green candle which happened. It can take you from the market. So you always put your stop loss above the if you are looking at resistance, you put it above the resistance. If it is support, below the support. If it is you are targeting buy, you below the support. If you are targeting a sell, above resistance. Okay? So once you enter this trade, like you can see, I entered from this level, then the market from this level, I entered all this I was in profit. Then this was the take profit here. The take profit. So you are coming, this is H1. So H1 simply means by the time you are H1, these are a lot of pins for, by the way. These are dollars. Just here, if you have opened the lot size of 0.20, you discover that you just from here up to here, you discover that you have made, if it is two positions, you have made $20. Or even if it's $5, okay? Even if it's $5, okay? So this is what this is how to use this simple strategy called the set and forget. This is what I wanted to share with you. Set and forget. Now, before we conclude, I want to do the practical way on how to analyze the market. For those who are just new, I know it may sound so a little bit confusing. We have a study for newbies, so don't worry. But you can just get one or two. You can just learn one or two. So let me go to our binary.com trading view. So I want to show you some of the principles that you need to use if you analyze the market. Any suggestion? Which market should we analyze? Boom 1000 or Boom 500?
Boom 1000.
What market should you analyze?
Boom 1000.
Which market?
Boom 1000.
Boom 1000. Okay. Let us analyze Boom 1000. Okay. Let us wait for the market. Okay. Thank you so much. So this is this kind of a market, this type of a market, it is called this type of a price chart. It is called line chart. So line chart, it is good for binary. If you are trading binary, line chart it is good. Now, since we are not dealing with binary, we will change. Line chart, it is also good if you want to trace your support and resistance very well. So we'll go to the candlestick chart. Okay. So H4, it is very important when it comes to finding a better trend of the market. So this is Boom 1000. Now, when we look at Boom 1000 very well, no wonder you are observing in Boom 1000, there are a lot of opportunity of buy. No wonder you have been seeing those strikes, crazy strikes. Now, those people don't know how to analyze the market. They are in soup. They are in soup. No, the broker is not fair. Hey, what? Now, I want us to analyze. No wonder. This is why I always tell to say, let us make sure that we buy our laptop. We buy laptops for those who don't have a laptop. It gives you a clear picture comparing to a phone. Even on the phone you can study, but to make your life easy, better you buy a laptop. Now, I want you to see very well. This is a market which is a representation of buyers and sellers. What is happening? So when you look at to my right here, you are able to see. To my right, you are able to see the price. So this is the price. You can see here 9,000, 9,950, 9,500, 9,640. We can also see where the price is now at the moment. It is at 1,056. This is where the price is. So you can see that this price is going up. There's a ranging. Now, when you look at history, the price, it came from this level here, okay? We're analyzing the market, okay? On top here, this is where our resistance is here. Our resistance, so it simply means that this is where the supply was here. Now, the moment the price starts to reach on the supply, it was on the resistance level. So once the market reaches on the resistance level, it sells like crazy. It sells like crazy. It sells like crazy. We don't have a pointer here. Too bad. But are you able to see my pointer here? Are you able to see where I'm pointing?
Yes.
So on this level, this is called resistance level. So resistance level, like the example which I gave for those who joined the area, to say the resistance level, it acts as your roof. Okay? So now, inside of your house, an example, inside of your house, so we'll say this is your house, right? We'll give an example, this is your house. Now, inside your house, it could be the sitting room here, the sitting room, right? Then inside your house, there's a roof. So this is the roof. Here above, this is the roof. Now, inside your house, you also have a floor. Now, inside your house, you also have a table. Maybe by looking at a table, this can act as your table, where I'm pointing here as a table. Now, what happens is that when you throw a ball on your floor, it will come with on the floor, it will bounce with full force. Boom, and it will go back to hit on the roof. Once it hit on the roof, the same roof there, the ball will come back with full force until it hits back on the floor. So this is the principle that I want you to be bearing. Once the price reaches on the level of support, the support level, why are we calling it level? It is the last point of resistance. Once it reaches on the resistance level, it will start selling like no man business, because it is on the level. It is on the last level of the price. If it reaches on resistance, on support. So no wonder you are seeing here, when the price came from resistance, there was a good sale. So if you entered from here, if you understood where your resistance level is, you could have been increased profit. You see, it has been selling. Even if buyers were coming in, they were still failing to take control. Once it has reached on the support, so boom 1000 as we are speaking, it is on the support level. No wonder in boom 1000 it has been selling. So where it is right now, boom 1000, it is on the support. It is on the support level. No wonder you are seeing it buying. It is on the support level. No wonder boom 1000 you are seeing it buying. So you see, the moment it reaches on the support level, it has been buying, and it will continue to buy until it reaches back on the same level there. So we are waiting for boom 1000 in H4 to either it passes, it breaks this resistance level, or it bounces back. Have you gotten the scenario here? So for those who are in boom 1000, just know that
Yes,
buyers, they have more power than sellers. So it simply means that if you have $100 account, if you open with a 0.05, you can hold even for 3 days. You can hold even for 3 days if you have a $100 account. You just open buy 0.05 or 0.10. You just give yourself, you discover that it will be striking. It will do a little bit of manifestos, but it will continue going up and down. One day here you see there was a good sale, it comes. And you know how much strikes they do. It is just within a second. It has already recovered. So this is how you analyze the market. Now, apart from that, I want also to understand the principle of price action. Someone will say, no, my leader, price action. I want to understand the price action. I want you to pay attention. We are talking about price action. So price action, it is a study of understanding the movement of the price. Now, the price that we are looking at, price of new
Yes, and
now these numbers, it is the price. If you're to money fee, what we are seeing here, if a minute you now, it is these are the people in the market who are causing the price to move the way it is moving. So what we are seeing, I have a or maybe grasshoppers. No, this is the representation of buyers and sellers. So these are the people who are causing the price to go up and to go down because of supply and demand. You ask price, we are high price because of this competition between buyers and sellers. This is what is making the price to be moving. All this movement, what we are seeing, is just a presentation of buyers and sellers. So once you see, even when you look at this moving average, it is pointing above. So it tells you to say the price is still going up. Now, how do you study price action? So price action, you look at the behavior of the market. You begin by looking at the history. So if you want to become a price action trader, you must understand the history of the price. Okay, how has this price been? How has been this price behaving in the past? Now, once you look at how the price was behaving in the past, it will help you to determine how it will behave in the future. Let us do this example here. Let me try to make this canine to be a little bit small. Now, we are looking at price action. Now, when you look at it, just below here, we are in, this is May, June. Oh, I want you to pay very much attention. Are you seeing where I'm pointing? Have you seen where there is June? Here down here, have you seen June? Where I'm pointing here, have you seen June?
Yes, coach. Yes.
I want you to open your eyes and look nicely, look cupboard to cupboard. For those who are just new, at least get a little bit of an idea. These are simple. You are just new. Don't think as if they are complicated. These are just simple, like drinking water. So we'll start from the beginning. But at least I want you to test some also to look at how the market looks like. And one day I've decided to do the analyzing together with a few people. Now, when you look at June here, this line which is passing here, up to there. So this is the new month of June. So per June pa, this is where the buy it is starting. So we have entered June with a bullish market. So we are in June. So in June we have entered with a bullish market. Now when you see June, when we go back here, May, the whole May, it was ranging. It goes up, it comes back. That is the whole May. The whole May, the market was ranging. Okay, when you look at the whole April, there was a downtrend. It was a good opportunity of sellers. The whole May, I mean April, the whole April, it was a downtrend. So it was a good opportunity for sale. Now, when you look at March, it was an uptrend. It was an uptrend or a bullish market. It was a good opportunity for buyers. Okay, but when you look at from December 2022, it has been December 2022. It has been trending up to 2023 January. It has been trending. So this is how the market is. But when you look at it on the overall picture, you are able to see that it was a downtrend. When you start it from here up to here, you can see that it was. But when you are looking at months and months and months, you are able to see each trend. So in June, just know that June it has entered. It has June this month. Boom, 1,000. It has started with a bullish market. So expect a lot of crazy strikes in June. So if you are entering with sell, just enter with scalping. You scalp, not to enter time holding. You cry. So this is how you analyze the market. You look at how the market was behaving in future. In history. Then it will help you to know where it is going. So once you look at it in history, it tells us that in May it was a downtrend. In May it was a downtrend. And it is now in June, it is covering the same downtrend. It is now covering. So we are expecting a lot of strikes. It is trying to recover this area here, where the sellers there was a downtrend as far as here. So buyers, they want to recover from this point. Remember, buyers they were at this level. The sellers, they had to took the market as far as here. So buyers, they want to take back this price from where it came from here on resistance, so that they can go where they want to go as far as there. Okay? So now what they are doing is that, no wonder you see, the moment they have to reach here, they have to push the market as far as there. Sellers, they decide to push it back. They still want to recover. No? So what does this tells you? It tells you to say, sellers, buyers, they have more power than sellers. The sellers, they failed to penetrate. They were supposed to break on the resistance, on the support here, so that it continues the downtrend here. But they failed. So it shows that buyers, they are full control. So we're expecting buyers to reach at this level. So once it reaches at this level, we'll begin to observe. We'll be waiting for we'll be observing for a breakout. Once it breaks, then it means that it will go as far as here. To recover this history here. So now, if you analyze this is a bigger picture. Now, for those who have small accounts, you use the M30. Let us go to M30. So those who are new, they are just wondering, what are these? They are simple. They are easy like porridge. Now, have you seen how in M30? Have you seen how it is buying? Starting from this area. You are seeing how it has been buying. And you know how strikes are. These are crazy strikes. M30, how strikes are. Just in M5, you catch just 5 strikes. You have already made crazy money. Just 5 strikes. Now imagine M30, you just hold a trade for M30 up to this level. You could have made $1,000 as we are speaking right now. $1,000. You even do 1,000 plus 20. You see how much you could have made 20,000 as we are speaking. So this is what I wanted just to show you today about the strategy code, forget trade. So you can put your take profit somewhere here. Your stop loss. So if you are putting your stop loss, let me give you an example like here. So let's do like this. Let us do like this. So you do like this. If you want to put your take profit, you do like that. Your take profit, you put it, let's say above here. This is where you put your take profit here. Okay? You put your take profit here. Now, you observe, okay, this is boom 1000. You observe where is the support? Okay, the support, this is where the support is. Where is the support? Okay, this is where the support is. The support, it is here. Okay, this is where your support is here. Having identified your support like that, this is where your support is. Now, if you want to put your stop loss, you put your stop loss below your support. You put your stop loss below the support, so that once it does the reversal, once it reaches on the support, it will bounce back and it will continue selling. It will continue buying that. But if you put it any near the none, once it makes a little bit of reversal, it will cut you, even if it was a winning trade. But since you have not put it below, because you know to say on support, this is a floor. Once it reaches here, it will bounce going up. So it is important that when you are putting your stop loss, looking at where you are, this is M30. So M30, you are putting it below the support level in M30. So the support level in M30 at this particular level, it is here. Now, if you are using M5 or M15, let us go to M15. If you are targeting M15, okay? If you are targeting M15, so M15, your support level in M15, it is still giving us the time, but you can, if you have a small, if your account is too small, you can put it below here, okay? So that once it comes back, there are a lot of levels, there are a lot of tables here to my complete support. So it can come back, once it reaches here, it can go like that. But you put it below this level here, this small here, so that once it comes back, once it reaches here, it can bounce up. If your account is small. If your account is big, automatically you need to put it below here. Then you take profit there. At this way, I hope we are getting one or two. I hope we are getting one or two. So this is how we'll be doing a lot of analyzing together so that you get to understand how it works. Okay. So this is where we end the team. It is already 21:11. So this is where we end. I wanted just to show you this strategy called the set and forget, okay, method. I would have this training is recorded. Once it is done, I'll share so that you can take time to go through it. So if for those who are just new, I know for those who are just new, it might sound so confusing because it is a little bit of advance. You have not yet done some short courses. So you need to learn first. Then all this, they will be very easy. It is Forex. Do not let anyone tell you to say Forex is hard. Forex is simple. What makes Forex to be hard? It is lack of understanding. It is lack of applying certain principles that you need to follow. So once you understand, then it will be easy for you to make profit. It is hard when you're not applying what you are learning. Okay? So can I see some 555 if you have enjoyed what you have discovered so far? Even if at least you have gotten one or two, even if you have not taken everything, at least can I see some 55 from what you have discovered so far? 5555555 what you have discovered so far. If you have enjoyed, can I see some 555 so far? 5555 so far. I can see Vivian there. Okay. Mutinta. Okay. Thank you so much. All this will be as simple as drinking water. Okay. So this is where we come to our today's. This is where we come to the end of our today training.